So moved.
Second.
Are there any questions? All in favor? Aye. Those opposed? The ayes have it. Okay, the insurance. What's wrong? The aye. Oh. The aye. Okay. Okay, the insurance renewal for 2020, Mr. Randy Graham from the Lincoln Agency. Courtney, do you want to personally set with something or just let him come up?
No, I'll just let him go ahead and explain what he's come up with.
He's done this before.
Thank you all very much for this opportunity. I believe everybody has a pamphlet in front of them that we kind of review. It has Lincoln Agency in front. It has an overview of coverages, and I'm sure that there'll be some questions, and certainly I'll answer all of those to y'all's benefit. I would like to kind of give a general statement as the agent of record on this. I shared this with Courtney and his staff the other day. Once again, y'all need to understand and to recognize the fact that what a good job as a jury y'all have done from a risk management standpoint and what you enjoy in the marketplace. It's very extremely seldom and almost unheard of for a jury to continue to carry the and I'm going to knock on wood, carry the low loss history that we enjoy here. Even with the fact that we had a tornado come through and the way that was handled by each of the departments that had damage, each of the areas that had damage, and the people that are involved with the jury and how it was handled with the companies. It was exemplary. We enjoy a great reputation in the insurance business, and with that being said, the very top markets have been approached, and all of them were interested, of course, in providing coverage for the agency. But as we'll go through, you'll see exactly how that was approached and what went on. It's important to recognize the fact that not only do we have an extremely low self-insured retention for a public entity the size of the police jury, we have maintained that same retention for the last 20 years, whereas most are required to carry at least $100,000 self-insurance.
Ours is 25?
25.
Very low.
And along with that, and along with the fact that the risk control and the attention to detail from a standpoint of workers' comp management, risk evaluation as far as drivers and machinery, and actual equipment and how it's maintained is held in high regard in the marketplace. And that's due to y'all's direction. And it's greatly appreciated from us from a public standpoint. And it certainly makes the job easier to deal with and to handle the exposure basis that are covered in the coverages that we have with the insurance carriers. So with that being said, thank you all for this opportunity. I'll kind of slowly go over the coverages that we have, and these particular coverages, let alone the fact that there's property coverages, but mainly the main interest that we have here along with those property coverages is making sure that we cover the public officials' liability and the general liability for the parish as a whole. And that's what's been encompassed by this aggregate policy that we put together.
How much greater coverage are we asking for this year rather than last year?
The only thing that we're asking for this year is from an additional exposure base. It all depends upon, you got road mileage, you've got road upkeep, you've got all that's taken part of consideration, but it's just an inflation guard. And to a great degree, we can control that based on the conversations that I have with Courtney and his folks as to as to making sure that we stay within the co-insurance values on the property. But from a risk standpoint, the risk has stayed fairly level. And depending upon the final budget, that's gonna affect it from the standpoint of how the rate is promulgated also. If there's an increase or a decrease in the budget, you see an increase or a decrease in the premium also. Now, from an exposure base, you have all of our properties that we have that we can go through here. General liability aggregate is $3 million. The products and completed operation aggregate on the first page is $3 million, with an occurrence of $1 million in each occurrence. Personal and advertising injury is $1 million. Damage to premises rented is $100,000. Medical expense is not covered because you have workers' comp and you've got liability from that standpoint. Sewage backup is $500,000. Property damage and bodily injury deductibles is $25,000. That's your retention. Public officials' errors and omissions is $1 million. Each wrongful act with $1,000 aggregate. $1 million aggregate. Public officials' employment practices is $1 million each offense. And public officials' benefits administration is $1 million for each employee. Go to the second page. On the automobile, you have combined single limit of $1 million for the automobile, $1 million for hired and non-owned auto liability, and $5,000 in medical payments. Medical payments are basically a non-liability issue where no questions are asked, and they take care of the accident without any issue from the beginning of the claim. Physical damage and comprehensive deductibles are $1,000 and $5,000 on the comprehensive and $1,000 and $5,000 on the collision. That was increased a couple of years ago to lessen the expense for the vehicles that we do choose to carry comp and collision on. Those are annually reviewed by the staff, and the older vehicles are taken off. Umbrella coverage is $1 million. All underlying coverage from the general liability limit and all the employee benefits is also $1 million. You have a retainage between the two limits if we ever get to the point to where we go into the umbrella of a $10,000 retainage between the two coverages. That's kind of like that's akin to a deductible on the umbrella. Next page, you can see that we have in the property, we have buildings total insured value of $30,627,000. Contents of $5,275,000. This is on a blanket basis. Property deductible of $25,000, and the co-insurance, it really rates between a 90 to 100% on the co-insurance.
How much of a claim did we have with the tornado? How big a claim?
We're still figuring a few of them.
We filed the temporary roof repairs for the library and the complex.
Okay.
For the $25,000 deductible, and therefore we will, and it went a little over that 25, but we should get 75 reimbursement for that.
Okay.
So we met that pretty quickly in the scope of things.
Thank you.
You can see that we also have coverage on the library of $6,854,000 with contents value of $4,370,000. Along with the West Arizona Avenue building of $3,156,000 with contents value of $81,955,000. Property deductible on that is a reduced property deductible of $5,000. We have crime coverages, money and securities, employee theft, money orders and counterfeit paper currency, and forgery and alteration of $100,000 with a $1,000 deductible. We have an equipment coverage of $4,038,000. That's an equipment deductible. That's basically your heating and air and equipment to operate the building. With and then a coverage for rented and leased equipment of $200,000. But the total equipment limit is $4,038,000. The total limit per breakdown of all the properties combined is $6,045,000. construction debris pollution policy and coverage for the waste for the dump is $2 million with $2 million aggregate with $1 million occurrence limit, with a deductible of $2,500 each occurrence. You've got medical expense limit for each of those for that location also. Site pollution coverage is $2 million with $1 million each occurrence with a $5,000 pollution deduction. Workers' compensation, this is covered by the state, all taken care of by the state requirements, and we meet the state requirements, and it's predicated by the payroll that is reported by the police jury per classification. And we gave a list of what the payroll had been, and we're gonna have that updated by the end of the year. One good thing that we have always enjoyed a strong loss history with the workers' comp also, and we're in the process of evolving into a dividend program on that, which can return part of the premium back, which is not generally offered, very seldom offered in the public entity business. So that's a testament to how the employees and the workers' comp has been handled.
Randy?
Yes.
Question. For them to give a dividend, you got it in, it's a mutual company?
No, they call it a dividend. It's not a mutual, but they're setting aside profits that they have that they're gonna, basically, it's just a return of premium. But they call it the easiest way to describe it is a dividend.
So they got a formula based on history and longevity?
Yes, sir. And the history, longevity, relationship with the company, and also their the experience model. So that's coming this next year. That's not for this year. It's coming this next year.
But when it arrives, is it gonna flow into our general? It'll come to us?
It'll come directly back to the police jury.
In a check?
In a check.
$5.
That is correct.
That's all right, I didn't want to.
Checks in the mail.
For your edification also, the police jury is responsible for, they're responsible for the property, or actually the detention center committee is responsible for the detention center, but we attach that piece of property to the police jury's policy because it saves we saved almost 70% on the property on that because of the relationship that it has to the police jury, and that's funneled through the detention center. And then as we go, I can tell you, we go on to the next page that you should have. Basically, the only anticipation we have other than a flat rate is if there's any increase from an exposure side, as far as increasing the value of the buildings to an appropriate base, anywhere from a 2 to 3 to 4% increase, not on the rate, but from an exposure increase this year. Everything else is going to be flat, and it very well, based on how much of an exposure increase there is or a lack of thereof, it could very well be just dead even or a little bit below as far as the premium. That bodes extremely well. We have, in a peer group study that we do every year, we market this to we've marketed to 17 different companies, and there's one that we're still awaiting their proposal, but they're going to request a higher self-insured retention, which in our estimation, that's going to be, I'll give that for consideration if there's something that's beneficial in that, but I don't think that it's going to be competitive enough to take on $100,000 self-insured retention. Yes, ma'am. Yes, ma'am. We went to Travelers, One Beacon, Midland Manager, Victor Schinnerer, JFW Specialty, Berkeley, AIG, Unigroup, EMC, United Fire, Hanover, CNA, America First, which is Liberty Mutual, Fred, Hudson, American Public Risk, they all required higher retentions and their rates were above where we are now. So Travelers holds y'all in extremely high esteem. And they've got a public entity program that'll gives us the benefit to manage our expenses. And as I said, we did a peer group study based on both parishes and counties across the northern tier of Texas through Louisiana into Mississippi. There's hardly one or two that may be in the same category as we are as far as premium. The rest of them are much higher, some to the extent of a 50 to 75 to 100%.
Mr. Russell?
Go ahead.
Mr. Pruitt?
Madam Chairman, I'd like to offer a motion that we accept the insurance renewal proposal from Randy Graham and the Lincoln Agency.
I second.
All of those in favor indicate by saying aye.
Aye.
Those opposed? Okay, thank you.
Thank y'all very much, and thank you for your diligence and your management. Appreciate y'all.
Thank you for what you do, getting this prepared and shopping.
Mr. Ernest Inch.
So I have some items for you to review as well, in regards to the group benefits provided to the employees and retirees of the jury. Thank you for around that way.
Thank you.
Yes, ma'am. So again, to echo what Mr. Randy said, I appreciate the opportunity to come before you again this year. Really, this is my third year to have the opportunity to present in front of you guys, and I truly take that to heart that you guys are trusting us with basically 120 individuals, health insurance, vision insurance, and life insurance. I tried to make it as concise as possible, so the second page that you're looking at has essentially 4 columns on it to review. What I wanted to show you are, there's essentially 2 plans offered every year. There's a plan for the active duty employees and the retirees under age 65. And there's a plan that's offered to the retirees that are over age 65. And that's because for the individuals that are over age 65, Medicare is primary, and there's some different rulings and regulations that go along with that. What we did when we took over a few years ago from PGRMA is we matched the benefits in one of the plans in order to provide the most aggressive approach to offering benefits to the employees and retirees. So you'll see on the left column, there's current Medicare primary retiree. If you follow those down, those are the benefits provided as they list. 0 deductible for all plans. Out-of-pocket maximum $7,150 and $14,300 for the actives and pre-65 retirees. And you'll notice on the retirees post-65, all of the co-pays are $0. That's because of the Medicare paying primary for those plans. The only thing that's not primary is prescription drugs, and that's mandated by the federal government as those go. Urgent care $100, emergency room $100, major diagnostic testing $250. I want to echo again those benefits. This plan was created for the jury to match the benefits that were offered before from PGRMA. That's how we got to this list. On the right 2 columns are the 2020 benefits, the renewal. You'll notice everything is identical except for the pharmacy benefits provided to the retiree. There were some changes in the mandates there that actually they get a little bit of a lower copay for this year on their prescription drugs. As it reflects in the cost, you'll notice that luckily last year we were able to maintain a 0% renewal. This year we're just slightly under 0, and you did hear that correctly, slightly under 0 for health insurance, which is just to echo again what Mr. Randy said, you guys are held in very high esteem, very high regard in as far as how the staff here, Ms. LaTanya runs a very tight ship on the health insurance with court crew on keeping everybody's claims filed properly, and any issues, she's a running point on those for us. And that also goes hand, oh, yes, sir, I'm sorry.
Can I read this right? We're getting basically a $3,000 deduction in our
Decrease.
monthly rates?
Yes, sir. Decrease from last year.
Let me share something with y'all, if you don't mind interrupting. As we market these things, we bring the market to bear. And at some point in time, as y'all's representative, we play both ends against the middle on these. Ernest does a very good job in negotiating with the companies, and he brings them to bear to give you the very best price that they can bring. And in this particular instance, whereas how many years ago was it that we switched, we saved about $700,000-800,000, we've maintained that level. That doesn't mean it's gonna stay there. But for this year, we basically have a flat to a reduction in premium. Now, as things go forward,
That's
that
awesome.
could change, but,
Yeah,
we've got a long way to go to catch up to where we were.
If you think about where we were 4 years ago,
Yeah.
you know,
Absolutely.
like Randy said, we've saved substantially, and now our premiums haven't increased, and actually this year they're decreasing a little bit.
So essentially, there's zero change in what our employees are paying, and we're getting another $3,000 a month reduction.
Correct.
About $37,000.
The only change of note is the prescription copay for the retirees decreasing, so.
And that went down, that actually improved. There's no loss of, eyeglass
Vision.
benefit or
No, sir.
hearing benefit, any of that?
No, so the vision coverage is also with United Healthcare, that's a flat renewal on that piece. There's no change in that, they still have the opportunity to have their, which is something we added 2 years ago.
That was a brand new program that had not been on the policy prior.
Correct, they're able to get their glasses and vision checkup in addition to their insurance, and that's all flat.
You know, I know that was a good thing, but I still haven't forgotten some of the phone calls I got this result. You have to tread that ground very carefully.
Oh, there's no doubt. That's why it's very important to stay as straightforward as you can.
The dental coverage, are we self-insured in the dental coverage, or is that it?
That's
Well,
not
they pay
it.
their own.
They not in here.
Yeah, that's not it.
Mr. Russell,
I make a motion that we accept this proposal.
I second.
are there any questions? All those in favor indicate by saying aye.
Aye.
Those opposed? Okay,
Thank you all for the good job.
Thank you all very much. Yeah, thank you.
All right, is there any other business? I'm not gonna have this much longer.
Thank you all very, very much.
Thank y'all.
We appreciate it.